Hello people, welcome to the channel. If you are new to my channel, welcome. And in my channel, I like to talk about strategies for Forex, and also I talk about the lifestyle. Okay, today I'm going to teach you an important strategy, an important indicator that I use a lot, and it is the MACD indicator. All right. To be honest, I'm not a fan of indicators that much because pretty much all of them are very lagging indicator. All right, so it means that the price moves and then the indicator follows. Okay, and we normally we don't want that. We just want something to show us that how price is going to behave. All right, but one thing that I'm pretty much really interested in is the indicator MACD indicator, and that's why, because I can pick up momentum with it, or I can pretty much, it can give us some warning, or the warning signs that the price is about to change its course. Okay, and that's something that can help us in our decision making. All right. Now, let's get to it without further ado. And okay, so pretty much what it is like, as I said, it's really a good indicator. And pretty much in doing my analysis, that is the only indicator that I use in most of my analysis. All right. Okay, so the MACD, it stands for moving average convergence divergence, which is also known as the MACD. Okay, um, is one of the most simplest and popular indicator used by pretty much all the traders, and that's what I use mostly. Okay, and essentially it's a trend following indicator that shows the relationship between the two uh, as I said, two moving averages. Okay, so as you can see, as I said, it's like a moving average convergence divergence. I'll go to detail and I explain to you what they are standing for and how you can interpret them. Okay, so let's just apply it to applying it in your to applying it in your chart. Pretty much just depends what you are basically doing and how what broker you use. If you're using the MT4, what you can do is pretty much trying to go into the indicator and then just applying through the indicator using the MACD. Okay, MACD indicator. Okay, so pretty much that's how you can go. So you find the MACD and then applying it to your chart. Okay, as I said, it just comes down to what platform you're using. MT4, MT5, it just depends on what you're using. Okay, all right. Now, what is happening here is okay, now the question is, how does it work? Okay, so um, pretty much we can see here, as I said, there are four components here. All right, so what are the components? Okay, we have two lines, which are the MACD line and signal line. So this is the signal line. I said, let me just make it the color. So this is the signal line, and this is the MACD line. Okay. Later on, I will explain everything to you. Okay. Okay. So you can see the difference between the two. The MACD line, which moves faster and is more sensitive to price changes, which will be the main focus of the MACD indicator, compared to the other line, which is the signal line, which reacts slower to price changes. Therefore, it can give it like a smoother appearance. Okay, so this is what the first two components are. Now, let's go. So as I said, MACD line, signal line. Now the third component is the histogram. Okay, so histogram, how does it work? Okay, so if the line crosses above the MACD line, crosses above the signal line, the histogram will turn green. Okay, so this is how it is, right? So if it crosses above, the histogram turns green. And then the opposite direction, if the line crosses, okay, below the you can see the histogram will turn red. Okay, this is one thing that we can see. There is another thing to it, okay, which is going to be the gap between the MACD and signal line, which will affect the size of the histogram, right? So what does it mean? So if the two lines are further apart, for example, you can see here, all right, then you can see the histogram gets bigger, okay? And then if the two lines get closer, as you can see, the histogram becomes smaller, okay? And it is showing the amount of momentum. So it means there are many people going to buy or sell if the two lines are apart. Okay, there is going to be big momentum. But if there is less momentum, if you can see the distance between two lines getting smaller and smaller, it means the momentum is reducing. Okay, so you got to be careful. You got to look at the changes too. Okay, next component is the zero line. Okay, which simply represents the center of the MACD indicator. Okay, now the way traders utilize the indicator to identify momentum is by looking at the crossover between MACD and signal line. This is how we're going to implementing it, how we're going to use it in our advantage for our analysis. Okay, so let me show you an example. All right, if the line, for example here, crosses above the signal line, it indicates that the market is on upward momentum. And if, see, upward momentum. And if it crosses downward, it means we have the downward momentum. Okay, so the downward momentum exists. All right. So we can utilize the size of the histogram to determine the strength of the momentum itself. For example, so this is how we're going to use the strength of the momentum. Okay, if the MACD crosses above the signal line while the histogram is getting larger, it shows us the upward momentum is getting stronger, okay? And at the same time, if the histogram is getting smaller in size, all right, it means the upward momentum is getting weaker, okay? It's getting weaker. Now, okay, so this is how it's going to happen, okay? Now, establish the fact that, okay, MACD is based on moving averages, okay? So the question is, why we should use MACD, okay? That's the most important question, okay? So, so as you can see, there is a similarity between MACD and moving averages, okay? But the fact is, why we should use them together, why we should use MACD and moving average together, okay? Now let's just answer this question, okay? we have the MACD that is set to default. So let's just consider a quick example here. For example, we have the MACD okay, here with default setting 12 and 26, and over here we have two exponential movement, again 2 and 26 EMA. Okay, same values. Notice the correlation between the two indicators. Every time we have a crossover on the moving average, we also have a crossover on the MACD, but it's between the MACD line and the zero line. Okay, here, right? So, and so as you can see, the crossover on the MACD gave a much earlier entry signal compared to the crossover on the moving average. Okay, this is what actually we want. Okay, as I said, we are going to use something to give us the opportunity to understand the next move in the price. Okay, that's what basically is like a strategist. Okay, the strategist is going to design a strategy based on the movement. But if you know the data before and you know what's going to be the movement for the next move of your opponent, okay, so you pretty much can set your move accordingly, okay, and you basically can profit yourself better. That's what we're actually trying to understand here, okay. So that's why I prefer it as my momentum indicator. Okay, so let's talk about the different strategy that we can use for okay, how we can pretty much can use with the MACD indicator. So first of all, okay, first of all, before we just go there, I just need to explain something to you here. Okay, um, there is a big mistake that pretty much the traders make. Okay, as that they're using the indicator by itself. Okay, remember that we are not any indicator is going to give you a sell or a buy signal. Remember that. Okay, so the indicators are extra pretty much evidence that you need for your decision making. Okay, so as I said, you have the bigger picture. You should know whether you are in the trend environment or you are in the consolidation environment, right? You know your environment first. You use all your evidence, and then you can use you can use the MACD for extra confirmation, and that's what you need. Okay, extra confirmation. Not only don't use it just as a like the main ingredients. It's like a recipe, all right? So you have several ingredients. One of them is the MACD. So it's not, you're not going to make decisions only purely based on MACD, okay? That's the main thing. So um, it's a bad idea, okay, to use MACD alone. So here we can see that the overall market is only downtrend, okay? For example, let's see here, okay, okay. MACD line, signal line, all right, and okay. Let me see, where are we? Okay, let me see if we can find. Okay, as I said, that's a common mistake. For example, here, as you can see, the general momentum is downward. Okay, the trend is going down. All right, that's the main thing. However, the MACD is crossing over upwards. Okay, and that's what exactly is happening. Okay, now it doesn't mean that you go and just do the buying. No, that's wrong, because as I said, the trend is going downwards. Okay, the only thing that's giving you here is change of the momentum. That's all it's giving you at this stage. Okay, so that's what I mean. The MACD is indicating a bullish momentum, but the market is only downtrend. This is exactly why you shouldn't use the MACD by itself. because what the MACD is showing us is only the short-term momentum. And as traders, we also need to take the long-term trend into consideration. And as I said, the bigger picture. Always take into consideration your bigger picture, okay? Because we never want to trade against the trend, okay? So simple but high win rate strategy that I recommend for pretty much everyone, okay? This is what is happening. As I said, you can see here contradicting signals, okay? That's what's happening. Okay, that's the strategy. Okay, let's just have a look. Now, what we're going to do here, we're going to combine our MACD indicator with 100 EMA. Okay, as I said, this is a simple, most simple, effective strategy that I have been using it for a while. Still, I'm using it. Okay, and combine it together, it gives you a really high win loss ratio. Okay, that's the main thing. Okay, now what's happening? As I said, 100 EMA. This way we can safely trade at MACD while making sure that we are staying within the same direction of the long-term trend. So this is how you trade the strategy. First step is you want to identify, the first thing is you need to identify the long-term trend by looking at the 100 EMA. If the price is above 100 EMA, it indicates that the long-term trend is upward. And if the price is below, it indicates that the long-term trend is downward. Okay, this is if the price is above. As you can see here, the price is up here. Okay, this is the 100 EMA. Price above it, this is upward. Okay, and if the price below 100 EMA, here it's going to be our downtrend. Okay, this is here, this is going to be downtrend move. Okay, that's what you're going to first of all identify the fact. Okay, now then second step is we want to look for crossovers on the MACD, okay, that shows the same signal as the long-term trend. So in this particular example, we can see so let's just see, we can see long-term trend is upward, meaning we only take signals when the MACD crosses over upwards. And so here's where you want to take a long position. Now, for your exit strategy, you can place your stop loss at the nearest swing low. Okay, that's the main thing. So that's how we're going to do nearest swing low, and set your profit target at 1.5 times your stop loss. And as you can see, this trade, okay, pretty much hit our target. That's a good, simple, easy strategy with a really good win loss ratio. Okay, so let's look at another example. Okay, next example, this is this one. As you can see, first of all, okay, we look at the 100 EMA. The price is below that, so it indicates the long-term trend is downward. Okay, next we have to see a cross down on the MACD, and so this will be our entry signal to go short. Okay, so again, as I said, this is how it's happening. So as I said, first of all, we establish that the trend is downward, and then we're looking for the MACD crossing over and going down. That's what we want. Okay, so okay, this is for stop loss. Again, we place it above the nearest swing high. That's the key point, nearest swing high. Okay, and as you can see, then again for take profit 1.5 times your stop. Okay, and what's happening? So our profit got hit, and we are profitable in this trade again. So pretty much, as I said, this is what you are going to, is how you're going to implement it. Obviously, there are many ways that you can use MACD as a reference point, okay? Later on, I will just make another video about how you can use MACD in your favor to give you a very right correct timing, uh, so that way you can predict when the trade will change the course, and where giving you an early sign to get out of the trade if you are in a long-term trade. Or as I said, we all just trying to understand if there is any kind of like any warning sign that we can pretty much get from like a trend, whether the trend is close to end, okay? So that way we can get off the trend, or if we can just getting prepared for the entry opposite direction. Okay, this is another way that you can use the MACD. So I'm hoping that this video is really helpful for you. Use it. If you have any question, just type it down below. Give me any example and send me any comment that you want further clarification. If you have any question, as I said, just type down below and I try to answer your questions. And hopefully you enjoyed this video. Just make sure if you enjoyed this video, give me a big thumb, and then subscribe to my channel, and also hit the bell button so you're getting notified when I'm just producing another video. I hope you enjoyed this video. Stay tuned, people, and I hope to see you soon again. All right, have a good